Okay, I'm recording this video after close of trade Friday, 24th September 2010, and since it's the end of the week, I'll do a little bit of a longer update looking at my charts here. So first of all, just a daily chart of the E-mini here, just to show that we had quite an explosive day in the market. We ended up closing up 22 points, only about 1.5 million contracts traded, but we're now kind of safely closed above this cyclical resistance, and starting to wonder, well, are we breaking into a decent uptrend? I must admit, at turning points, you'd expect to see a little bit more color in terms of kind of the better volume type signals. You can see here we've got some color at the top being made here, some more color here with high volume churn bars, more color here, volume exhaustion, amateur bars, and so on. And we had one little kind of high volume churn bar last week, but nothing this week. So that's something that says, well, there's not a lot of, in terms of volume patterns, the same kind of deal. There's not a lot of kind of volume patterns that's showing distribution at that point. So interesting. For the week, we had really only just average volume, about 9.9 million contracts traded. Happened to be a combination of a high volume churn bar and a volume exhaustion kind of bar. And those are coded in better volume. Those are shown in this purple color. Often get questions saying, well, how can you get an exhaustion bar and a high volume bar? Because an exhaustion bar tends to suggest kind of a high range, and a high churn bar happens to suggest lower range. Well, yep, I understand that logic, but when I do the math, you can get bars that are both. So it is what it is. We know we're coming up to a cyclical turning point on the weekly chart, but we need to see some price weakness before marking that in. So again, not a lot of kind of signals here to show this is maybe a kind of a blow-off move or something like that. So sine wave, I said over the last few days, the uptrend is not finished until we get some kind of pullback and end of trend warning signal on the lower time frames. If we go to the 135-minute chart, we're still in an uptrend. We've not had this cyclical cross here to show a pullback first of all, and then some kind of end of trend signal. However, if we go down a time frame to the 81-minute chart, and there are 5 of these bars on in a day session on the E-mini, we've had our pullback on actually marked on the close on Thursday. We got kind of confirmation with this move up on the Friday's open, and then we've got kind of a cyclical turning point approaching, which will be an end of trend warning signal. So that's kind of what I'm seeing on the lower time frame charts. And then I just want to talk about some higher kind of time frame charts and some bigger kind of issues in the market. First one, just to talk about interest rates and bonds. So we've been in a huge downtrend in terms of bond rates, and that's been an huge kind of rally in bonds over the certainly the last several months, and starting to see an end of trend warning signal kind of approaching on the interest rates charts. So this is the 5-year interest rate chart. We've had our pullback and a downtrend, and then this last week the rates started to really move down, and then we've got a cyclical cross happening on this time frame, which will put an end of trend warning signal here. If you look at the TY, the 30-year, we kind of bumped up a little bit on Friday. We're not close to a cyclical cross here. If I go to the TN, the 10-year, a little bit closer to a cyclical cross, and we did kind of bump up. I think the best way to look at these 3 charts is not to look at any single one individually. It's kind of blend them all together and say, well, there's some kind of bottoming process happening in these interest rates. And then when you combine that with the monthly charts, which are showing cyclical crosses here, this is the TY, this is the 30-year showing a cyclical cross happening here. TN, the 10-year, again we've got a cyclical cross going to be made shortly, and the 5-year here, the cyclical cross being made. So what we're seeing is end of trend warning signals on the lower time frames, the daily time frames, coinciding with cyclical crosses on the higher time frames, the monthly charts. So that's suggesting an important kind of reversal point potentially in interest rates, which will mean the bond market rally kind of coming to a close. So that's just something to bear in mind in kind of the longer term analysis here. And then I'm going to show you some commitment of traders charts. Now, I've not shown these for weeks and weeks and weeks, and part of the reason is I've become a little bit uninterested in looking at the commitment of traders data. There's this whole issue of what you read the professionals doing as they're buying or selling, if they're hedging or they're trend following. So it's like you're kind of making a decision there. And then, at the end of the day, the data comes in weekly. It is kind of delayed because it represents numbers from midweek and so on, and often it's not conflicting with my analysis. But if it does conflict with my analysis, then you're like, well, which way do I go? Do I use my kind of shorter term charts, my daily charts and my tip bar charts in order to make my decisions, or do I look at weekly charts and what's going on here? So in some respects it has in the past kind of clouded my judgment, and so I've just not been looking at them as intently and just not paying it that much attention. So let me just show you what happened on Friday in terms of the indices though. So just brought up a weekly chart of the SP. So this is the large contract. The professionals went short, net short negative 4.5% of open interest, and we've got the better commitment of traders oscillator overbought at 158. So kind of overbought here. We've not kind of turned over, looped over and started down, so it's not necessarily kind of indicative of a swing down at this point, but overbought at this point, and the professionals are starting to get short here. But now I'm just going to pull up a couple of, so I'm going to take that indicator off, better indicator off, and I'm going to show you an alternate view of the world. This is taking those exact same commitment of traders numbers and flipping them upside down. You can actually do that in the better commitment of traders indicators on the website. You can just one of the inputs, you can just move from true to false, and it flips the data over. And in some ways this kind of, for me, represents the direction of the market a little bit closer, and happens to be the inverse of what the professionals are doing. And a few months ago I was kind of playing around with my better momentum Emini indicator, and happened to put in the commitment of traders numbers and show the divergence patterns here. And an interesting thing happened. So these are the divergence signals that appear when you do that. So bearish divergence signals are white, bullish divergence signals are red, and then superimposed on the charts themselves you see kind of bearish divergence signals here, plus some bullish ones at rally points here, bearish and bullish, some bearish signals here. After all of these bearish signals and bullish signals, there is a little bit of play. So even though we've got kind of bullish signals kind of early on in this downtrend, they were areas where the market did kind of stop the move down and then kind of resume the downtrend at this point. And then over the last few months, since the beginning of the year, we had a bullish signal at the beginning of the year, bearish signal into March. That one's a little bit early, if you like, in terms of bullish signals, but the last couple of weeks we had a bullish signal come up, and we've had pretty strong rally ever since. And so that's playing just off the interaction between price and the commitment of traders numbers. Now if I show you exactly the same thing on the bond charts, again commitment of traders numbers kind of flipped over and so on, with exactly the same analysis. Kind of previously you can see some bearish divergence signals, some bullish divergence signals. Some of these you could argue were kind of misplaced or whatever, but we've not had one of these signals come up on these charts forever. And then the last couple of weeks we had a bearish divergence signals kind of come up here on the 30-year chart. It's at a previous high, potentially a double top being made here, and it's signaling that when you look at the combination of these two charts, that we're going to get a continued upswing in equities and the start of a downswing potentially in bonds. So and that might be a function of what traders are seeing in terms of the FOMC announcement this week, where the FOMC is the Fed is going to be extremely aggressive in generating inflation and asset price inflation and stimulating the economy. And maybe traders are starting to say, well, that's going to work until it doesn't work, so that's what we're going to play in the meantime. And I'm just showing you these charts because they're kind of rolling around in my heads. I don't have a particular. I'm more and more focused on my short